Hello, my name is Mayanka. I am accounts and finance trainer from Uplatz. Today we will discuss one of the important concept of Income Tax Act, taxation year. This is the one of the important basic concept. In this concept, we will discuss when the income will be taxable. When the income will be taxable under the Income Tax Act. In this year, in this class, we will discuss current year, what is the current year, assessment year, previous year, and in which year the income will be taxable. So now we will start our discussion. Taxation year. Taxation year. Number one, previous year and assessment year. Previous year and the assessment year. As per the provision of the Income Tax Act, the income tax is levied on the income which is earned by the person in the previous year. When any income which is earned by the person in the previous year, then such income will be taxable in the assessment year. The income earned by the person in the previous year, it will be taxable in the assessment year. For the example, sorry, for the example, Mr. Ram, he is working in a company, ABC company. He is working in ABC company, and the salary is 50,000 rupees per month. So his total income for the previous year 2020 and 21 will be the total income of such person. Means Mr. Ram, he has only salary income, there is no another income. So the income, so the total income for the previous year 2021 is 50,000 into 12. Such 6 lakh rupees will be taxable. It will be taxable in the assessment year 21 and 22. Is that the income of the previous year will be taxable? The income which is earned by the person in the previous year, it will be taxable in the assessment year. In the assessment year. What is the meaning of assessment year? What is the meaning of assessment year? The definition of the assessment year is defined in section 2, subsection 9. The definition of the assessment year is explained in section 2, subsection 9. The definition of the assessment year means the period of 12 months commencing from 1st April every year. The assessment year means the period of 12 months which will be start from 1st April, which will be start from 1st April, just like 1st April 2021, 1st April 2020. So this is the assessment year is the period of 12 months. The period in which the income is earned, the income which is earned by the person in the previous year, then such income will be taxable. Such income will be taxable in immediately following the year. It will not be taxable in the same year. It will be taxable in the year immediately following the previous year. Immediately following the previous year is that the period which is immediately following the previous year will be known as assessment year. The year immediately following the previous year will be known as assessment year. Is that if there is any person who earn any amount of income in a previous year, then such income will be taxable in the next year, means in the following year, and such following year will be considered as assessment year, and such income will be taxable in the assessment year. It will be taxable in the assessment year. So the income which is earned in the previous year 2021, if there is any income which is earned in 2021, then it will be taxable in 21 and 22. Then it will be taxable in 21 and 22. And if there is any which is earned in 2021, 2021 and 22, then it will be taxable in 2022 and 23 means the income will be taxable following the immediately following the previous year. Immediately following the previous year. So the previous year, this is the previous year, and this is the assessment year. This is the previous year and this is the assessment year. So the income which is earned by the person in the previous year will be taxable in the just preceding year, just the following year, just following year, and such following year will be known as assessment year. Assessment year always start from 1st April. Assessment year will always start, it will always start from 1st April, and it is a period of 12 months. Means it will always start from 1st April and it is always the period of 12 months. Previous year, what is the meaning of previous year? The definition of the previous year is given in section 3. In section 3, the previous year means financial year immediately preceding the assessment year. Means the year immediately preceding the assessment year will be known as previous year. The year which is immediately preceding the assessment year. As per the example, the assessment year, for the example, the assessment year is 2022 and 23. So in this case, the previous year will be just preceding the year. Means preceding the year is 2021 and 22. 2021 and 22 is a previous year, and 2022 and 23 is the assessment year. Is that the period just preceding the assessment year? The period just preceding the assessment year will be known as previous year. It will be known as previous year. As mentioned earlier, the income which is earned in the previous year will be taxable in the assessment. Business or professional newly set up during the financial year. Now we will discuss when there is any business which is a newly set up, during the financial year. Means it is set up, it is a start within the year. In such case, the previous year shall be the period which is start on the date of shifting, of the business and profession, and such previous year will be end on 31st March. Means the financial year is a year which will be start from the date when any business start, any job start. Means the date when the income start, and it will be ending on 31st March. For the example, Mr. Mohan, he is start his business from 1st October 2020. He start his business from 1st October 2020. So in this case, the year will be start. Means the previous year or his year will be start from 1st October 2020. Means his previous year will be start from 1st April 2020 and it will be end on 31st March 2021. His previous year will be start from 1st October 2020 and it will be end on 31st March 2021. And the income, for the example, business income which is earned by Mr. Mohan in such year is 5 lakh rupees. Then it will be taxable in 2021 and 22 assessment year. It will be taxable in 2021 and 22. So if there is any person who start his business during the financial year, then such a year will be start from the starting of the business, from the date when the business will start, and it will be end on 31st March. And the income which is earned by or earned from such a business will be taxable in the assessment year. The income will be taxable in the assessment year. If there is a source of income, if there is any source of income comes into the existence in the said financial year, then the previous year will be comes from the date in which the source of income newly come. Is that if there is any new source of income is come in any of the financial year, then the previous year will be start from the date when such source of income comes into the existence, and it will be end for the financial year, and it will be end on 31st March, and it will be end on 31st March. For the example, Mr. Sohan, he is a invest money in shares. He is investing money in share, and he received dividend, on 1st October 2020. Then in this case the previous year will be start. In this case the previous year will be start from 1st October 2020, and it will be end on 31st March 2020, and it will be end on 31st March. It will be end on 31st March 2021. And such amount of income, such amount of dividend will be taxable in 21 and 22, means it will be taxable in the assessment. So if there is any new source of income is established in during the previous year or during the financial year, then such income will be taxable in the in the following year, means in the assessment year, and the previous year will be start from the date. The previous year will be start from the date when such source is then such source of income start or establish. So in this case, it will be the previous year will be start from the date when the source of the income is start. Now we will discuss our example. A is running a business from 1993 onwards. He is running a business from 1993. Determine the previous year for the assessment year 21 and 22. Mr. A, he is in business from 1993. From 1993. Now there is a assessment year is 2021 and 22. Assessment year is 2021 and 22. This is the assessment year. So what will be the previous year? So as per the question, what will be the previous year? Determine the previous year. So the previous year means just the preceding year of assessment year. Just the preceding the assessment year. So the assessment year is 2021 and 22. So the previous year will be 2020 and 21. The previous year will be 2020 and 21, means from 1st April 2020 to 31st March 2021. This is to be known as previous year. This is to be considered as previous year for A. It will be considered as previous year. So answer, the previous year will be 1st April 2020 to 31st March 2021. It is 21. Sorry. Example number 2. A chartered accountant set up his profession. A chartered accountant set up his profession on 1st July 2020. Mr. Chartered accountant set up his profession business on 1st July 2020. Determine the previous year for the assessment year 21 and 22. There is a chartered accountant. He set up a business on 1st July 2020. So the assessment year is 2021 and 2022. So what will be the previous year? The previous year will be start from 1st July, from the date when the business will start, to 31st March 2021. Means the previous year will be start from 1st July, when any of the business start during the year. During the year, then the previous year will becomes from the date when the businesses start. So the business is start from 1st July. So the previous year will be start from 1st July 2020 to 31st March. As per the provision, the assessment year always being of 12 months, but the previous year may be less than 12 months. It may be less than 12 months, but the assessment year will never be the less than of 12 months. So the previous year will be start from 1st July 2020 to 31st March 2021. Now we will discuss another point: undisclosed source of income. If there is any undisclosed income, then in this case, when it will be taxable, means what will be the taxable year in the case of undisclosed income. In normally, as per the provision of Income Tax Act, the income which is earned in the previous year will be taxable in the assessment year. Assessment year means the year just following the previous year, and the previous year means the year which is just preceding the assessment year. So in the case when there is any income which is earned in the previous year, it will be taxable in the assessment year. But if there is any income which is not disclosed, means if there is any undisclosed income, then when it will be taxable? When such undisclosed income will be taxable. Undisclosed income, just like cash credit. Cash credit is an undisclosed income. Number two, amount borrowed or repay on hundi. Amount borrowed, the amount is borrowed by the person by the way of hundi and repaid on hundi. Unexplained expenditure. The unexplained expenditure. Just like Mr. Ram. Mr. Ram marries his daughter, marries his daughter and spent 25 lakh rupees, and but in the respect of such 25 lakh rupees there is no detail about such income, means from where he earned such 20 lakh, such a 25 lakh rupees. So this is to be known as unexplained expenditure. Unexplained expenditure. Unexplained investment. Unexplained unexplained investment. Next, unexplained money. Unexplained money. And the next is investment etc not fully disclosed. The investment which are not fully disclosed. Is there the undisclosed source of income? The undisclosed source of income are: number one, cash credit. Section 68. Cash credit. Section 68. And next, amount borrowed or repay on hundi. Amount which is borrowed or repaid on hundi. Section 69D. Section 69D. Unexplained expenditure. Unexplained expenditure. Section 69C. Unexplained investments. Section 69. Unexplained money. Section 69A. Investment etc not fully disclosed. Section 69B. So these are the source of undisclosed income. Undisclosed source of income. Now we will discuss all these sources in the detailed form so that you can understand. So that you can understand these sources properly. Number one, cash credit. Section 68. Section 68 of Income Tax Act, cash credit. When there is any sum is found, when there is any sum which is created in the books of account of the assessee. When there is any sum which is created in the books of account of the assessee and the assessee offer no explanation, means there is a sum which is created in the account of such person, but he does not provide or he does not offer any of the explanation about such income or about such source, means he does not explain the nature of the source, the nature of such income, the source, or he explained, but this is not the satisfactory. Means he explained the source of income, the nature of the income, but this is not satisfactory in the opinion of assessing officer. This is not satisfactory in the opinion of assessing officer. In this case, such income or such amount will be considered as cash credit, and such amount will be such amount will be liable to income tax, and the sum so created may be charged as income as the assessee to that previous year. Means such income will be considered the, then such amount of cash credit will be considered as income, and it will be considered the income in the in that previous year. It will be considered as a income in that previous year. For the example, Mr. Ram, he has a business. He has a business. There is a credit of 5 lakh in the account, in the account. But but he does not explain the source and the nature of such a 5 lakh rupees. He does not explain. He does not explain the source and the nature of such a 5 lakh rupees. Explained. He explained. But not satisfied. Not satisfactory to AO. Means the AO is not satisfied. The AO is not satisfied with the reason which is given by him about such income. About such income. So in this case, the AO credit such income, or he will, or such amount, such a 5 lakh rupees will be considered as income of Ram. It will be considered as income of Ram, and such income is earned in 2020 and 22, and such a income will be considered as, such amount will be considered as income of Mr. Ram in the previous year, in the previous year 2021 and 22, and such income will be taxable in assessment year 22 and 23. It will be taxable in the assessment year 2022 and 23. So it will be considered as income. It will be considered as income in the year, in the that previous year in which it is disclosed, the previous year in which it is disclosed, and it will be taxable in the assessment year. Next is unexplained investment. Unexplained investment. When there is a, when in any of the financial year immediately preceding the assessment year, means in any of the previous year, if there is any assessee, he has made any of the investment, if there is any investment which is made by the assessee, and such investment are not disclosed by him in his books of accounts, if there is any investment made by the any of the assessee and such investments are not disclosed by him in his books of accounts, and and he provided disclosure, but when AO asked about AO asked the explanation about such investment, he does not explain it, or he explained it, but such explanation is not satisfactory, and such explanation is not satisfactory, means the AO is not satisfied with the opinion of such a person, of such assessee, means he is not satisfied with the explanation which is given by the such assessing officer, such a assessee. In this case, such a value of the investment, in such case the value of investment will be considered as income in the debt financial year, when there is any investment which is made by the any of the assessee in any of the financial year, and such investment are not disclosed in the books of account. It is not disclosed in the books of account, and it is disclosed But when AO asked the explanation about such investment, such assessing doesn't offer any explanation or offer any explanation, but it is not satisfactory. But it is not satisfactory in the opinion of AO. In this case, the value of such investment, in this case, the value of such investment will be considered as income. It will be considered the income of the assessee. It will be considered the income of the assessee of such financial year. In such financial year, such income will be considered the, it will be considered the income, and it will be taxable. For the example, Mr. Mohan, he invests in shares. He invested in shares, but these shares are, these shares or these investment are not disclosed in his book. In his books, he has not disclosed these shares in his books. Now, the value of the shares is 2,50,000 and investment made in 2020 and 21. The investment made in 2020 and 21. The AO asked him about such shares or about such investment. The AO asked him about such investment, but he does not disclose the source of such investment. So in this case, such 2,50,000 will be taxable in the previous year 20 and 21. It will be considered as income for the previous year 20 and 21, and it will be taxable in the assessment year. It will be taxable in the assessment year. So if there is any undisclosed income, if any of the investment which is not disclosed, then it will be considered as income in the financial year or in the previous year, and it will be taxable as income, and such an undisclosed investment will be taxable as income in the previous year, in the assessment year. It will be disclosed, it will be considered as income. It will be considered as income in the previous year, and it will be taxable in the assessment year as income. Next, unexplained money. Unexplained money, when in any of the financial year the assessee is found, when in any of the previous year, when the assessee is found that he is the owner of any money, any jewelry, any bullion, or other valuable article. If there is a assessee and such assessee is found to be the owner of any money, found to be owner of any jewelry or any of the precious article or the valuable article, and such such a thing or such item is not disclosed by him, and such jewelry, such money, any valuable article is not disclosed by him in his books of accounts, and the assessee offer no explanation about these items, or explanation given by him which is not satisfactory in the opinion of assessing officer. In this case, the money and the value of billing and the value of such jewelry and the value of such valuable article will be considered as income. It is deemed as income of such assessee, and it will be taxable in the assessment year. Means in that financial year, such income, such amount, such a value of the item will be considered as income of such assessee, and it will be taxable in the assessment year. For the example, during the search, during the search, during the search, Mr. Ram, Mr. Ram is considered the owner, the owner of gold. The value of the gold is 5 lakh, and such a search is made in 2020 and 21. It is made in 2020 and 21. Such a gold is not disclosed by Mr. Ram in his books of account. Not disclosed. It is not disclosed in his books of accounts. So it is considered as undisclosed. It is considered as undisclosed. So in this case, such a 5 lakh rupees. In this case, such a 5 lakh rupees will be considered as income. It will be deemed as income for the financial year 20 and 21, and it will be taxable. It will be taxable in the financial year 21 and 22. If there is any unexplained money, if there is any unexplained money which is not disclosed, which is not disclosed in the books of account of the assessee, then such undisclosed money will be taxable. Then such undisclosed money will be taxable in the hands of such assessee, in the hands of such assessee, and it will be deemed as income in the financial year, and it will be taxable in the assessment year. So this is the undisclosed or unexplained money. Now, unexplained investment, amount of investment which are not fully disclosed in the books of account. When there is any person or when there is any assessee in any of the financial year, he made some investment. If there is any assessee, he made some investment in any of the financial year, or he is found to be the owner of money, jewelry, any valuable article, and the assessing officer find that the amount which is spent by him, the amount which is spent by him on making such investment or purchasing such articles exceeds the amount which is recorded in the books of account. Means the amount, actual amount which is spent by him for the purchase of such a gold is a more than in comparative to the value which is disclosed in the books of accounts. In the books of account, he asks about the reason, means he will ask explanation. If explanation is not given by the such person, and the explanation given by such assessee is not satisfactory in the opinion of assessing officer, then such excess amount will be considered the income. Then the excess amount will be considered the income of the assessee for the such financial year. If there is any amount of investment, there is a amount of investment which is made by the assessee, which is made by the assessee, and the such assessee is to be found as the owner of any money, of any bullion, of any jewelry, or any of the valuable article. He has disclosed such money, he has disclosed such valuable article in his books of account, but the actual amount which is spent by him, but the actual amount which is spent by him to purchase such valuable article is more in comparative to the value which is disclosed by him in his books of account. The assessing officer, he will ask about it. If the explanation, if the proper explanation is not given by the such assessee to the assessing officer, and he is not satisfied with the opinion of such assessee, then the excess amount will be considered as excess amount. Then the excess amount will be considered as income of such assessee. It will be considered as income of such assessee. For the example, Mr. A, he is found to be the owner of some gold or investment, some gold, some gold. He disclosed such gold in his books of account at rupees 3 lakh. But in actual, the amount spent by him for such gold is 5 lakh. But he disclosed only 3 lakh in his books of account. So in this case, the difference of 2 lakh rupees, 5 lakh minus 3 lakh, the difference of such 2 lakh rupees will be considered as income. It will be considered as income. It will be considered as income and it will be taxable. It will be considered as income and it will be taxable in the financial. Sorry, it will be taxable in the assessment. It will be considered as income and it will be taxable in the assessment. So the excess amount means the differences amount will be considered as income and it will be taxable in the hands of such person, in the hands of such assessee, in the assessment year. In the assessment year. Now we will discuss it by the way of example. If the assessee is found to be the owner of, say, 300 grams of gold, if there is any assessee, he is found to be the owner of 300 grams of gold. The market value of such gold is 25,000. The market value of such gold is 25,000. During the financial year ending 31st March 2021, but he has disclosed to amount spent 15,000, means he disclosed that he spent only 15,000 rupees in acquiring such gold. The assessing officer, the assessing officer can add 10,000 rupees as income of the assessee. The income of the assessee if the assessee offers no satisfactory explanation. We said there is a assessee, there is a assessee, and he disclosed gold as rupees 15,000. 15,000, but the fair market value of such gold is 25,000. Assessing officer ask the reason, but the explanation which is given by the assessee is not satisfactory. In this case, such 10,000 rupees will be considered as income added in his income. It is considered as income and it will be taxable. And such 10,000 rupees will be taxable as an income of such assessee. Unexplained expenditures. Unexplained expenditures. When there is any assessee in any of the financial year has incurred any expenditure, when any assessee who incurred any expenditure and he has not satisfactory explanation about such a source of such expenditure. If there is any assessee, he spent or he has incurred any expenditure and in the respect of such expenditure he does not have the proper explanation, he does not have the proper explanation of source of such expenditure, source of such expenditure, or the explanation which is given by him is not satisfactory. The opinion or the explanation which is given by the assessee to the assessing officer is not satisfactory. It is not satisfactory. In such case such amount of unexplained expenditure, in such case the amount of such unexplained expenditure will be considered as assessee, will be considered the income of the assessee. It will be considered the income of the assessee in the financial year and it will be taxable Such unexplained expenditure will be deemed to be the income of the assessee and shall not be allowed as deduction under any head of income. It will not be allowed as deduction. It will not be allowed the deduction. For the example, there is Mr. B. He spends 5 lakh rupees. He spent 5 lakh rupees on some expenses. AO asked about such expenses. About such expenditure, but B does not explain it. does not explain it. In this case, such unexplained expenditure means such 5 lakh rupees will be considered as income. It will be considered as income. And such expenditure, such expenses, such expenditure are considered as expenses when he files his books of account, or when he files his return, he will consider it as an expenditure. So for the purpose of this, for the purpose of taxation, such expenditure, such expenditure of 5 lakh rupees will be disallowed. Such expenditure will be disallowed, and the income of the assessee will be increased by rupees 5 lakh, where for the example the total income of the assessee is 10 lakh, which is include, and from such 10 lakh, after excluding such expenditure, means after providing the deduction, after providing the deduction of such expenditure, but such unexplained expenditure found, so the expenditure will be disallowed, means the income will be increased by 5. So in this case, the total income will be 15 lakh. The total income will be 15 lakh. So indirectly, it will be such a 5 lakh rupees will be taxable. Such a 5 lakh rupees will be taxable. So in this case, any of the unexplained expenditure made by the assessee, and in the respect of such unexplained expenditure, the assessee has not explanation, or he has explanation, but AO is not satisfied with the explanation which is given by him, then such AO will be considered, then such amount will be considered as income, or such expenditure will be disallowed. Such expenditure will be disallowed, and it will be considered the income of such person in the financial year, in the financial year. Amount borrowed or repay on hundi, the amount which is borrowed or repay on the hundi. When there is any amount which is borrowed, when there is any amount which is borrowed on hundi, or any of the amount which is repaid through the hundi, when there is any amount which is borrowed by any person by the way of hundi, or if there is any amount which is repaid by the person by the way of hundi, means such amount is repaid not through account pay check, not through online banking, means such payment is made through the hundi. So in this case, the amount which is borrowed, so in this case, the amount which is borrowed or the amount which is repaid will be considered as income. It will be considered as income of the person borrowing or repaying for the previous year in which the amount was borrowed or repaid. Means if there is any person, he collect or he borrow any of the money by the way of hundi, he takes any money, he borrow any money by the way of hundi, by the way of hundi, or repay any amount by the way of hundi, then such amount which is given or which is borrowed by the way of hundi will be considered the income of such person. It will be considered the income of such person, and it will be considered the income in the previous year in which he borrowed or in which he is repaid, and it will be taxable. For the example, Mr. Ram, he borrow 2 lakh rupees through hundi, or he repay 1 lakh rupees through hundi. So in this case, such amount will be means such 3 lakh rupees, total of 2 lakh plus 1 lakh will be considered as income. It will be considered as income in the year of borrow or in the year of repay. Means if they borrow or repay in 2020 and 21, then such amount will be considered as income in the financial year or in the previous year 2020 and 21, and such income 3 lakh rupees will be taxable in the assessment year 2021 and 22. It will be taxable in the assessment year 2022, 21 and 22. So if there is any amount which is borrowed or repay by the way of hundi, through the hundi, other than account paycheck, other than net banking, or other than any other source, then such income, so then such amount which is borrowed or repaid will be considered as income. It will be considered as income in the year in which such amount is borrowed or such amount is repaid. However, where any money borrowed on hundi has deemed to be the income of the person, he will not be again liable to assess in the respect of such amount on the repay of such amount. Means if there is any amount, if there is any amount which is considered as income when he borrowed such money, when he borrowed such money, then it will not again considered as income when he will repay it. When he will repay it, such amount will not be considered as income. For the example, Mr. Mohan borrowed 2 lakh rupees from Sohan and through the hundi, through hundi. Now, in the previous year 2020 and 2021. Now, such income will be such amount of 2 lakh rupees will be considered as income. It will be considered as income in previous year 20 and 21. Now, Mr. Mohan repay such 2 lakh rupees to Sohan. He repay through hundi, through hundi in the previous year 21 and 22. Now it will not be considered as income. Now it will not be considered as income because it is already assessed as income in the previous year. In the previous year, it is already assessed as income. Now it will not again considered as income. Means not assessed as income. So if there is any amount which is borrowed through the hundi and it is repaid and it is considered as income and it is repaid and it is repaid, then it will not assess, then it will not again assess as income of the person. The amount which is repaid shall include the amount of interest which is paid on the amount borrowed. The amount which is repaid by him, it will also include the amount of interest. The amount of interest. Now, we will discuss certain cases where now we will discuss the certain cases where the income of the previous year will be assessed in the previous year itself. Normally, as per the provision of Income Tax Act, the income of the previous year will be assessed or it will be taxable in the assessment year. It will be taxable in the assessment year. But now we will discuss some cases. Now we will discuss some cases where the income of the previous year, where the income of the previous year will be taxable in the previous year, means it will be assessed or it will be assessed as income or it will be taxable in the previous year itself. Means earned in the previous year, assessed in the previous year and taxable is also in previous year, not in assessment. So, general rule. The general rule is income of the previous year is to be assessed in the assessment year. General rule of the income tax is that the income of the previous year will be taxable or will be assessed in the assessment year. In the assessment year. But there are exceptions. But there are some exception of this rule. But there are some exception of this rule. Number one, shipping business of non-resident. In the case of shipping business, the shipping business of non-resident, if there is a shipping business of any non-resident, then in such case the income will be assessed. The income will be assessed in the previous year. It is assessed in the same previous year. Number two, person leaving India. Person leaving the India. If there is any person who is leaving India, who is leaving the India, In such case, the income which is earned by him in the previous year will be taxable in the same previous year. It will be taxable in the same year if he is leaving the India. He is leaving the India. Number three, in the case of AOP, in the case of BOI, or in the case of artificial judicial person, which is formed for which is formed for any event purpose, for any which is a particular which is established, or which is made, or which is formed only for the particular event purpose. When there is any EOP, there is any BOI, or there is any judicial person formed for the particular person, means they are formed for a particular objective. In such case, when the particular objective is fulfilled, then it will be abolished, means it will be end. So in this case, when the AOP, BOI, and the artificial judicial person formed for the particular purpose, in such case, in such case, the income of such AOP, BOI, and the artificial judicial person will be taxable in the same year. It will be taxable in the same year. It will not be assessed in the assessment year. Next is person likely to transfer property to avoid the tax. When there is any person, when the any of the person who is transferring the property to avoid the tax. If there is any person, if there is any person who wants to transfer any property to avoid the tax, in such case, the income of such person will be taxable in the previous year. In such case, the income will be taxable in the previous year, not in the assessment. Discontinued operation or discontinued business. In the case of discontinued business, if there is any person who is discontinuing his business, then the income from the business will be taxable. The income from the discontinued business will be taxable in the same assessment, in the same previous year. It will be taxable in the same previous year. Is there in the case of shipping business of non-resident. Number two, person leaving India. Number three, AOP, BOI, and the artificial judicial person who are formed for a particular event. Number four, person likely to transfer any property to avoid the tax. Person likely to transfer property to avoid the tax. And in the case of discontinued business, in all these cases, the income will be taxable in the previous year. The income will be taxable in the previous year, not in the assessment year. Not in the assessment year. The income of the assessee, the income normally, as per the normal provision of Income Tax Act, the income of the assessee of the previous year is chargeable to tax in the assessment year, means it will be taxable in the assessment year. Is that, for the example, the income of the previous year 2020 and 21. The income of 20 and 21, it will be taxable, or it will be assessed as income under, it will be assessed as income during assessment year 2021 and 22. 2020 and 22. It will be taxed in 21 and 22. Therefore, 21 and 22 will be considered as assessment year for such income which is earned in 2020 and 21. However, there are some cases, some cases where such provision is not applicable. But there are some cases where such provision is not applicable, and the income of the previous year will be taxable or will be assessed in the same. It will be assessed in the same. The exceptions are, these exceptions are made to protect the interest of revenue, means these such type of provision is made only for to protect the interest of revenue. So these exceptions are as follows. The exceptions are as follows. Number one, shipping business of non-resident. The shipping business of the non-resident. The shipping business of the non-resident, where a ship which is belonging, when there is any ship which is belonging on charter by a non-resident, when there is a ship and such a ship or such charter belonging to the non-resident, it is belonging to the non-resident, and such a ship is used by such non-resident for the purpose of carrying the passenger, carrying the livestock, carrying the mails or from goods shipped at the Indian port, and the ship is allowed to leave the port he only when it will pay the amount of tax. Is that when there is any shipper and there is any charters which is chartered of any or by any non-resident person, and such a ship is used for carrying the passenger, carrying the animals, livestock, carrying the mails or any of the goods at the Indian port, there such a ship will be leave India. The ship will be leave India only after paying the amount of tax. Only after paying the amount of tax, such a ship will be leave India. Or satisfactory arrangement has been made for the payment, or there should be first he will pay, sorry, such ship will pay the amount of tax or provide the satisfactory arrangement for the payment, just like bond. Therefore 7.5% of freight paid or payable to the owner or the charter or any other person on his behalf, whether in India or outside India, on the account of such carriage is deemed to be his income in India, and it will be chargeable to tax in the same year. Is that when there is any ship of any non-resident person which carry the passenger, livestock, mails or goods, and it is ship it is shipped at the Indian port, then the ship will be allowed to leave India. The ship will be allowed to leave to India only after the payment of tax, or after providing the satisfactory and after providing the satisfactory arrangement for the payment of such tax. Means he will pay, such a ship will pay, the owner or such a non-resident of such ship, he will pay the amount. Such a non-resident or the owner of such charter, owner of such ship, or any of the person who carrying such ship will pay 7.5% of, he will pay 7.5% of freight, or 7.5% of freight which is paid or payable to the owner. Me, because the income which is earned by him, through the carriage of passenger, through the carriage of livestock or mail, will be considered as the income which is earned in India. It will be considered as the income earned in India, and it will be chargeable to tax in India. For the example, Mr. John, he is the owner of a ship, and he is a non-resident. The ship is used for the carriage of passenger, livestock, mails, and other things at the Indian port. Okay. At the Indian port, he charge total freight of rupees 2,50,000. 2,50,000 is total freight is a charge by such ship from the passenger or through the means or through the transfer of or carriage of livestock, means total freight is a 2,50,000 rupees. Now, such a ship will not leave India without the payment of tax. Without the payment of tax. After the payment of tax, he will, such non-resident, such John can leave India. Without the payment of tax, he will not leave or provide a satisfactory arrangement. Provide a satisfactory arrangement about such payment. So the payment will be 7.5% of the total amount of freight which is paid and payable. So it will be the amount of tax will be 18,750 rupees. The amount of tax will be 18,750 rupees. because it will be considered that, because in the case of such a business it will be considered that the income of freight, the income of such freight is earned in India, it is earned in India, so it will be taxable in India. So first he will pay the amount of tax. First the Mr. John, or the owner, or the person who carries such a ship, he will pay such amount of tax, then after he will leave India, or he will provide any arrangement in the respect of such payment, then he will leave India. Then he will leave India. So in this case, such income will be taxable in the same year because he will pay tax. So for the payment of tax, the income will be assessed in the same time, in the same year, in the same year. So in the case of shipping business of non-resident person, the income will be taxable in the same year. It will be taxable in the same year. Person leaving India, when there is any person who is leaving the India. If there is any person leaving the India, then any individual, if there is any individual may leave India during the current year, during the current assessment year, or shortly after its expiry, and he has not present any intimation to return to India, is that if there is any person who is leaving the India and there is no any intimation about his return, whether he will return in India or not, in such case the total income of the assessee should be taxable in the same year, because there is no expectation whether he will come in India or not. He is leaving the India. So in this situation, the total income of such person will be taxable in the same year. It will be taxable in the same year. For the example, Mr. B, he is a resident. He is a resident of India. He is leaving. He is leaving India. He is leaving the India. So during the period, he has earned 3,50,000 rupees as income in the previous year 20 and 21. In such case, he is leaving India. In the case when he is leaving the India, then such income will be taxable in the same year. Mean it will be taxable. It will be taxable in 2020 and 20 and 21, not in 21 and 22, means not in the assessment year. Such income will be taxable in the same year, and he will pay the amount of tax in the same year. He will pay the amount of tax in the same year. For the example, suppose Mr. X is leaving India for US on 10th June 2020. Mr. X is leaving the India on 10th June 20, and it appears to the assessing officer that he has no intention to return. Means as per the assessing officer, he will not return in India. Before leaving India, Mr. X may be asked to pay income tax on the income which is earned by him. Is that Mr. X may be asked to pay the amount of income tax on the income which is earned by him during such period, during the 1st April 2020 to 10th June 2020. So he will liable to make the payment of tax on the income which is earned by him from 1st April 2022 to 10th June 2020, when the AO when the AO has when the AO is in the opinion that he will not, or he will not come to India. So in this situation, Mr. X, he will pay the amount of tax on the income which is earned by him during the previous year, or during such time period, during such a particular time period, and it will be taxable. Such income will be assessed or will be taxable in the same period, in the same time. AOP, BOI, artificial judicial person. AOP, BOI, artificial judicial person formed for a particular event or for the particular purpose. When there is any AOP, there is any BOI, body of individual, or any of the artificial judicial person. It is formed, if it is formed for the particular event, if it is formed for the particular event or for the particular purpose, then the income, then the income of such AOP, BOI and artificial judicial person will be assessed. It will be assessed in the same year. It will be assessed in the same year and it will be taxable in the same year. Is that if there is any AOP, BOI and artificial judicial person, it is formed or it is established for the particular event or for the particular purpose, and the assessing officer is in the opinion that now such a AOP BOI will be dissolved. Means now it will, after such a event, it will not be in the existence. Means it will be dissolved in the same year. Such a AOP BOI will be dissolved in the same year or in the next year. In this case, he can make, in this case, the AO can make the assessment of the income of such AOP BOI up to the date of dissolution. Means he will assess or he may assess the income of such AOP and BOI up to the date of such dissolution. And such income will be assessed and such income will be assessed in the same year. It will be assessed in the same year. When the AO is in opinion that such firm will be dissolved in the same year or in the next year, then he may assess the income. He may assess the income up to the date of dissolution in the same year. Person likely to transfer property to avoid the tax. When any person during the current year or during the current assessment year, if there is any person transfer any of the property, to avoid the tax, is that the assessing officer is in opinion that there is a person, then that there is a such particular person and he wants to sell, he wants to transfer or he wants to dispose of or otherwise part any of the assets to avoid the payment of tax. Is that when the AO is in opinion that there is a person, when the AO is in opinion that there is a person and he is likely to charge, sale, transfer and dispose of any of the property or part of the property to avoid the tax liability. In this case, the total income of such person, for the period from the expiry of previous year, to the date when the assessing officer commences proceeding under this section is chargeable to tax if the assessment is that when the assessing officer has any doubt or he is in the opinion that such person will sale or dispose of any of the property or part of the property to avoid the tax liability, then he will assess or he may assess the income of such person. He may assess the income of such person for the particular period, he may assess. Discontinue operation. The last is discontinue operation, section 176. In the case of discontinue operation, the income of the period will be assessed. It will be assessed in the period. Means where any of the business or any of the profession is discontinued. When there is any business or there is any profession is discontinued in any of the assessment year, then the income of such a previous year up to the date of discontinue, then the income of such previous year up to the date of discontinue at the discretion of the assessee, at the discretion of the AO, be charged as tax in that assessment. Means it will be taxable in that particular assessment year or in that year in which the business is discontinued. So these all are the those situations where the income will be assessed in the same year. It will not be assessed in the next year. Means following assessment year. So normally, as per the provision of Income Tax Act, normally the income will be taxable in the assessment year, means following the previous year. But there are these cases, in the case of discontinued operation, when the person leaving India, when the person leaving India in the case of shipping business of non-resident, in the case of shipping business of non-resident, and the person who is transferring the property to avoid the tax. And in this situation, in the case of this situation, the income will be assessed in the same year. In the income will be assessed in the same year to avoid the to avoid the though to avoid the expectation about tax evasion. They will, or the assessing officer will assess the income in the same year. So, on the basis of such discussion, we have understand the taxable period. We have understand the provision of taxable period. Means normally the income will be taxable under the normally the income will be taxable in the assessment year, but we have also discussed those situations where the income will be taxable in the same year. It will be taxable in the same year. So, on the basis of such concept, we have understand that taxable year when the income will be taxable under the Income Tax Act. So, thank you so much for watching this video and to understand the concept. Okay, bye bye and have a nice day.